One of the most important business relationships that any company has is with their bank. You depend on your bank for many things, not just loaning you money, but also processing cash coming in and processing the checks that you're sending out to your suppliers. Well, what happens if you develop a bad relationship with your bank? Most business owners pay very close attention to their relationship with their bank, especially when it comes time for the renewal of their line of credit. Well, you can't just fix a bad relationship with your bank overnight. It's going to take a number of months to show them that you've changed the way you're working with them and things are going to be better going forward. So, the first thing you need to do is communicate with them on a regular basis. Tell them your story. Explain to them what had been happening that had caused you to do things that didn't make them happy and how you're going to do things better in the future. The second thing is you want to produce stable, timely financial reports for them. You should be getting financial reports within 10 days of the close of the month for yourself to look at anyway. So if you're producing financials and you're getting to the bank on the 15th of the month, that's more than enough time for them to be happy with what you're doing. Even if you produce them and get them to them by the 20th of the month, that's still well in line with proper performance. But the other thing is that it's important those financials be stable. You don't want to be in a position where you're showing a large profit this month and a large loss the next month. Even if over a period of time that balances itself out, a rapid change in profitability or loss on a monthly basis looks bad because it shows that you're not properly managing your financial reporting. You need to show profitability and net income on a regular basis, and you need to show positive cash flow. Those are two things that the bank is interested in. Remember that the bank is a business as well. And the one thing that they're very interested in is making sure that whatever loan they've given you is going to be able to get paid back. And getting financial reports that are stable and timely tells them that they can get the information they need to assure that they're going to get paid back. What you need to do is also show that you're building value in your company over time. That's building equity and net income on a regular basis. This is important because it shows that your business is growing profitably and is able to take care of any future liabilities that you might have. And to show that you're managing your company, one of the things that's important for you to do is to manage your accounts receivable and make sure that any invoices that are being paid to you or should be paid to you are paid on a prompt or close to prompt basis. Anything that's over 90 days, the bank is going to consider as uncollectible. Even though you may get it later, they're not going to be happy with that. And you need to make sure that you collect your money within 60 days of when it's due, and certainly no longer than 90 days. The same thing is true with your AP aging. You want to make sure that you pay your bills on time so that the amount that you owe to your suppliers is paid on a current basis or a prompt basis, and that you maintain a checkbook balance that's enough to be able to cover whatever checks you're issuing. No bank is going to be happy if you're bouncing checks or asking them for a quick overdraft protection on a moment's notice because you wrote too many checks and you didn't get the cash that you expected. Also, make sure that your balance sheet accounts are in line, having proper levels of inventory, making sure that your accruals and prepaids are properly posted, making sure that your assets don't have any negatives in there, and your liabilities don't have any negatives either, because that shows that your balance sheet is out of balance and isn't properly being recorded. And then realize that your bank has given you certain requirements of reporting on a regular basis, covenants that allow them to take a quick look at what you're doing and make sure that you're able to cover your loan obligations with them. And there are two numbers that are very important there. One is tangible net worth, which is the total amount of assets you have less your liabilities, and that has to be a positive number. And they're going to tell you what the limit is and what they're able to accept. And the second thing is the debt service coverage ratio. This shows the bank that you have enough net income, enough profit, enough cash flow to be able to pay the debt that you owe the bank, whether that be just interest payments or interest and principal payments. Either one or both is important that you have enough money to be able to function. These are all things that are important to do when you're getting ready to renew your loan with the bank. But more importantly, it's important that you do these things on a regular basis. And being able to show a bank either 3 months or 6 months of steady operation with these characteristics that I've indicated above is certainly a way of showing them that you have control over your company and you're managing it correctly.